Welcome to the Whitwam Wealth Real Estate Podcast. On today's episode, it's Broker Talk Real Estate.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
And so I want to welcome back my friend Gabe Franco. I'm Scott Whitwam, and we are both real estate brokers in different areas of the country. But we thought it'd be good if we could get a chance for just brokers to talk a little bit about the real estate market. So Gabe, thanks for hanging out with me again on the Whitwam Wealth Real Estate Podcast.
Hey, glad to be here. Thanks for having me, Scott.
Gabe is the broker of Royale Real Estate, located in the Coachella Valley in La Quinta, California, which is in the Palm Springs area. And I'm a broker with Denham Premier Real Estate in the Phoenix area. And I thought this would be good, was have an open discussion. I have a couple of questions that I kind of want to get your input on. But other than that, let's just talk about real estate. How's that?
Hey, that sounds good. It's my second favorite thing to talk about, other than my family. So let's go.
There you go. Well, let me ask you how the overall real estate market has been in Palm Springs, or maybe even in California in general, and just to get started.
Yeah, I would tell you, and this is a question I'm getting asked a lot right now. I could tell you 2024 started first quarter, things started off really well, really strong, a lot of sales, both for agents and across our valley here. And I'd say somewhere in May time frame, things really kind of started slowing down. And one of the overarching themes that I've been seeing is that there's a little bit of a push and pull between whether we're in a buyer's market or a seller's market. Out here, it's starting to show up in that the properties that we have on the market that need repairs, they need updating. They're not in great shape. Those properties are sitting on the market. Unless you have something special of you've been upgraded, you're kind of turnkey ready for a buyer to walk in. Buyers are being selective. That just does not seem to be the urgency that we used to see. Certainly, yeah. So that's probably the biggest thing I've seen.
Definitely a lot fewer of them out there than there were obviously just 2 years ago.
Yeah. And, I think part of that now, when buyers are being more selective and houses are sitting on the market, there are some sellers who are finally starting to see the picture that, you've got to do something special to move your property if you're truly motivated. And so certainly price is one of those pieces that tends to be the number one driver to help create some urgency is price. So for buyers who are willing to do a little bit of work, come into a house and maybe freshen something up or do some remodeling to it, there are some opportunities that you're starting to see because houses are on the market longer. Out here, we went from being roughly 23, 24 days on the market to we're sitting closer to 40 days right now, 43 days on the market. So that's certainly something we haven't been used to out here. What about you?
Yeah, that's quite a change. Yeah, the Phoenix market's been a little bit, I'd say, rougher than that. Our days on market are hitting in the 70s.
Really?
Yeah, and we've seen obviously a real pullback. It's interesting because it's not just localized. This is a national issue.
Yeah.
I was watching Fox Business the other day, and it may have been on CNBC also, but they were saying that real estate sales in 2024 are at a 50-year low. And so that takes you back almost, to, Jimmy Carter, the late 70s, early 80s, and the kind of problems that my parents were dealing with back then. And then I saw another report that said that statistically, with numbers, you can always kind of manipulate them however you want, but they were saying certainly back to 1995, this is the worst overall volume sales year since at least 1995. So Phoenix has been impacted that way. Our investors out here are really feeling the crunch. I got some friends who are really real. I don't know. They're nationwide, $1 million a month type investors, and some of them, and I've had private conversations with them, so I won't use their names, but one of them lost over $1 million in 2023. One of them lost $2 million by the first quarter in 2024. Those are some real numbers, I mean, that's big money, but it's just, so it's been a little bit different. And, there's always these little signs of encouragement, that you get, like first quarter 2024, you said it was good. And it looked like things were going to change. We'd had the promise from the Fed that in December they were going to start whacking interest rates. And certainly in their January meeting, they were going to start whacking interest rates. I think it brought some consumer confidence, and we started to see some change in Q1. Yeah. But then the promises fell deaf. I mean, they didn't do anything, and and we went into this real lull. And it's interesting because I've been doing this since 1989. It's when we bought our first investment house, and this has been, I will have to say, 2024 has been probably the roughest year. Fortunately, we've still done some deals. We're still paying the bills. We still got things moving. But this has not been the kind of year you want to go out and celebrate.
Well, I think that there's been a kind of a perfect storm, if you would look at it, multiple angles and scenarios as to why the market's kind of slowed the way that it has. Out here, we haven't seen as a dramatic of a price drop. We certainly have seen more inventory coming on the market. Days on the market has increased. The price, the average price has not dropped dramatically, but I do think because there was so much uncertainty about interest rates, certainly for the buyer side of things, that's putting a lot of pressure on the buying activity and the volume, and I think that's probably been one of the number one drivers. But I also do think, and we don't want to jump into politics, but the uncertainty of the election was a big part of I think, at least for what we saw here, a lot of our buyers just wanted to see either way how things were going to play out, and let's get on the other side of it. It was almost like as soon as that Tuesday was wrapped up, our volume of showing started increasing. We have actually gotten some offers on properties that had been on the market for several months. So I am anticipating, like you just said, sometimes there seems to be some signs. I do think that the same reasons that buyers buy are still there. You still have divorce, they need a bigger house, they need a smaller house, they have job relocations. Those motivators for why people buy are still there. And I think it's just been this, unless there's an urgency, a real have to, they just have not moved into that I'm going to pull the trigger. So I do anticipate that first quarter 2025 is going to be a stronger year for us, at least at the first quarter. Certainly with change in administration, change either way, I think that's going to be helpful. And I think that pinned up demand that has been there and has been waiting, it's got to burst at some point. And so I do think that there's some opportunities there for investors and for buyers to jump in and not just wait until the interest rates start moving, right? So
yeah, and there is a lot of pent up demand, and we're kind of in the same boat too. Prices haven't really changed much in the Phoenix area. Even in the outlying areas, we're seeing really strong price, but we're not seeing strong sales. And so it kind of makes it difficult when you're dealing with seller expectations, because a seller says, well, look, they sold a house, 2 months ago for X amount of dollars. Why would I take less than that? It's like, well, sometimes being a little bit more realistic, because there's such a small pool of buyers out there. Because even though interest rates are not, I would say, historically high, now generationally they're high. There's a whole generation of people who had not seen interest rates over 5%.
Yeah.
They're out there. But historically, I remember the first time I got a 6.875% mortgage, I was dancing. I could not believe I got a mortgage with that low of interest rates. And that was in 2005. So prior to that, I mean, how many houses did I buy with 9, 10, 11% interest, because that's what the market was.
Sure.
But what we've got now is we've got a whole lot of sellers who are sitting on mortgages with 2.25%, 2.5%, 3% interest, who would generally be sellers they'd be wanting to do the upgrade, find something bigger, or maybe they're empty nesters now and they'd like to go to a smaller place.
Sure.
But they're saying that they don't want to trade a 3% or a sub 3% mortgage for a 7% mortgage. And it's really creating a lot of pent up frustration. And I think there is some changes coming. From a economic standpoint, I don't think Jerome Powell has acted in the right direction by making the cuts that he has, with the economy being where it still is. But I think that we're seeing consumer confidence start to rise, and it could just be because they see a change in administration and, there's going to be new economic policy one way or another.
Sure.
And, and the likelihood that the rate cuts that we did have will now start to match some of the new economic policy, I think will give strength to the buying market. Because when the Fed cut, it was at the end of September when they cut that 0.5 point rate, all of a sudden our brokerage, we got hit, not only showings, but the amount of agents in my offices finally were getting properties under contract, and the calls I was getting and the number of listing appointments that I had just in that short 2-week period of time were stronger than any other part of our 2024.
Yep.
And then what happened? Every week after that, the mortgage bond market went up, and rates went back up, and now they're pretty close to 7. I think in my report on Friday, they were like 6.81% for a 30-year fix, according to Freddie Mac. And so what has happened is we've given all that back, and here, at least in the Phoenix area, the lockbox opens, the amount of showings has dropped even after the election. So I'm glad to hear that at least you're seeing a little bit of a volume change. We're kind of on that wait and see, what's going to happen with the Fed here in December.
Yep.
And then obviously, I think that there's some really smart people that have been proposed to take over some of the Fed chairman. Well, he said he's not leaving, but I think he's going to end up leaving. Commerce and some of these other positions over at trade and some of these things that are really going to help with some of the public policy, which I think will benefit with some of the changes that Powell has already made at the Fed. And when they match up, I think it's really going to move our market forward, and that could be as early as Q1.
Yeah, the question always ends up being, when's the right time to buy, right? And I mean, that's the $1 million question. And I am still a believer 20 years in our industry that the best time to buy was like yesterday, like right now, because there's always going to be, changing and evolving factors, right? We're talking about the Fed rate right now and the interest rates. It wasn't very long ago that we were talking about the supply issue. We had a so limited amount of inventory, and because of that, buyers didn't have options. And so I will say this, to those investors that are out there, I still think that there are good values to be bought right now. And my long-term philosophy is always, you're not going to lose in real estate unless you're forced to sell, right? So there's opportunities right now with sellers who are motivated, who are, like in your market, there's there's more inventory now than there's been in the last several years. So I do think that for a buyer who wants to get in and is willing to work with the rates they have now, there's some value that can be bought. I know out here, I've been showing properties where, some of the last few sales that we have pushed through, sellers took numbers that I didn't make sense to me. They were taking, $50,000 less than what their asking was on a house that was already pretty well valued. And so, there's always that question of when do you jump in? Well, if you wait until the interest rates start moving, I promise you, it's like right now we're sitting at a horse, at the horse gates at the Kentucky Derby. They're about to get opened up. And as soon as there's a 0.5 point movement, there is going to be a flood of buyers, which will then drive the prices back up. So
and multiple offers and having to waive, contingencies and all the other stuff that goes with it. I'm with you. I think this is a very good time to buy. Prices aren't going to go down. I mean, we've had 20% inflation over the last 3 years. I mean, if you accumulate and I've heard that depending on how you calculate it, it could be as high as 27% inflation. Well, you're never going to get that back. And so that means that the cost to replace these homes has gone up 27%. And so if you're buying this house now, the chances of a 2007-8 market correction, I just don't think is there. I don't think the economics are there. I think that because just inflation alone has changed the world. We're not going to see the toxic loans like we saw in 2007-8 come due because they're not on the books. Banks have done a much better job of qualifying buyers. So I think that if you got in now, you can negotiate some things. I can tell you that the last 3 properties that I sold myself, that we were able to negotiate incredible seller concessions, whether it's paying all of the buyer's closing costs, whether it was buying interest rates down, whether it was negotiating on price. I mean, just a lot of things that are not going to be there, like you said, when those gates open.
Right.
And you've got 5 people putting offers in, all of that goes away. Sellers aren't going to have to be as cooperative. And what the change is now with NAR and the sellers learning that they're not required to pay buyers' brokerage commissions, I think the next time we have a rush, you're going to start seeing sellers not offer real estate brokerage anymore. And that's going to add to the cost for buyers going in. And anticipation of that, VA and most of these GSE loans have already built in a mechanism so a buyer can finance in their realtor fees without damaging their concession level, because I think that they see it's coming. They know that it's where we're going to get at some point. So right now, buyers aren't dealing with that, but they will be.
There will be. And doesn't change the position. I think now's the time to buy. You can always refinance down the road. So from the first investment we ever made, it was a stretch. And I look back at it now, it's almost 20 years when we bought our first home. And man, I'm glad we went through the pain to get that first one. And I'm thinking back, I'm like, it's funny how real estate cycles, because when we bought our first home, I was able to get the seller to pay almost all of my closing costs. I asked for a concession. We offered over the ask. And it's funny how I think that's about the market that we're heading back to, where, we're asking for sellers to make a concession. If we're working on the buyer side, sellers understand, they're smart, they understand It's a bottom line, it's a bottom line business, what's their net going to be to them. And, but you're right. When there's 5 offers coming in, a seller is going to be much less willing to work with the buyer and the concessions and to pay for the cost versus right now when those houses have been on the market for 60, 90 days and they are ready to move on. So.
Yeah. Now I deal with all levels of investors, but I'll tell you that one of the things I see, because I get wholesale offers. I mean, just my email box fills up with them every week. One of the things I've seen is that most of the wholesalers are getting a little bit more realistic in this market. So I don't know how much you deal on the investment side with like investor fix and flip opportunities or the rentals that need repair that are off market, but we're seeing a little bit more I would say realistic approach to pricing on those side. And I think that right now for some investors, especially long-term hold investors, there's an opportunity now to pick up properties that need some repairs, whether they're full rehabs or whatever it is, and take advantage of where we're at now. And when rates come down, and they will, I'm pretty sure that rates are going to come back down. They may not get to where they were, but they will probably get around 4.5% to 5% at some point. And refinance and build cash flow on some of these properties and be able to pick some of these things up at what have become a little bit better price. I think that probably through the first half of 2024, most wholesalers still were unrealistic. I mean, I'd see stuff come in and go, man, that's retail, and this thing needs a full rehab, Yeah. But I think I'm starting to see a lot more, even from some of the national wholesalers, that there's some opportunities. What are you seeing kind of on that side, on the stuff that needs repair on the fix and flip side or maybe the off-market side?
Yeah, I think very similar. We are shifting towards it being a buyer's market. And so it just takes, and that's always part of the real estate cycle, is that it takes time for the cycle to show itself to what we really are. It's one thing for the seller to say, well, this is what my neighbor got. but we're in this market, and that was 3 months ago, and where we are now and what it's going to take to sell, this is the number. And once I've seen it this way, where a lot of the times it's the terms that tend to change first. A seller may be willing to give a little bit more concession, but then shortly after the terms, it's the price, and we're starting to see a little bit more on the price for homes that need rehab and they need that remodel. And that's where I feel like if you're going to jump in, that's the best case scenario right now, is looking for those properties that have been on the market for a longer time, those that need rehab, because the sellers realize they're not going to get premium pricing for a property that needs remodeling, that needs some updating. Right. And that's a change. That was not the case, prior to the end of 2023. At 2023, it didn't matter at all. All that mattered is you're on the same street and you had the same square footage. Just add an extra $50K to that house, and it was going to sell by the weekend. Right. That market's gone. So,
well, just before we wrap up here, let me just ask you to throw out your best advice for the next 90 days for either buyers or sellers. What do you think the best play is? Kind of in the real estate market.
Yeah. So to me, if I was really ready to take a step on the investment side, I'd be looking at places where you could pull out maybe potentially some equity that you have, whether it's on a property you've been holding. You don't need to refinance, but there's a lot of them have equity in it. You could do a HELOC, or you could pull some cash out. Use that to make a buy on a property where you could save some money because of the length on the market, because of the rehabs that are needed on the property. Now, if you wait until April or May to see the interest rates and all that changing, you're going to be in a dogfight trying to grab value where there's not value there because of the demand. But right now, the last few months have created some opportunities in there. So I'd be looking for places to pull some of that cash, use that to get qualified, make that purchase, and then, you can deal with the refinance at that point. But the value can be there if you buy something, that needs some rehabilitation. So,
yeah, that's good advice. Well, that's the time we have for this week's Whitwam Wealth Real Estate Podcast. I want to thank you for taking time to join me today. I invite you to subscribe and be part of our growing community. If you found this episode of Brokers Talking Real Estate Market beneficial, leave us a review. And if you have any questions, we'd love to hear from you. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to podcasts. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.